Hello, everyone.
Hello, everybody. Welcome to our second and what we hope is a monthly series of seminars that are sponsored by the Rhode Island Commercial Appraisal Board of Realtors. This event is sponsored by one of the best real estate companies in the state of Rhode Island, Sweeney Real Estate and Appraisal. I am Tom Sweeney. I'm the president this year of the Rhode Island Commercial Appraisal Board of Realtors. A couple of things before I turn it over to Steve Kirby to introduce our speaker. If you have any interest in joining us at the Rhode Island Commercial Appraisal Board of Realtors, or RICABOR, please feel free to reach out to any of our members and/or Jack Hudson, our executive director, to get information. One of the exciting things about putting on this program, or these programs, has been our outreach to the commercial industry, also to the residential side of the industry, to give them some education about how things are done. With that in mind, we're going to keep trying to do these on a monthly basis. Next month, we are going to have a market overview featuring three very qualified commercial brokers in the state of Rhode Island. Steve Kirby will give an overview of the East Bay and Aquidneck Island. Steve Flochbart from Hayes and Sherry, Cushman and Wakefield affiliate, will be giving the Providence and Northern Rhode Island market overview. And Karen Coturno from Abbott Properties will be doing the West Bay and Southern Rhode Island. We think it'll be very informative. Information should be going out. That should be the second Wednesday in February, but we will be confirming the date. I think Steve Kirby is going to introduce our speaker and give you the ground rules. So with that said, I'll turn it over to Steve, and we'll go from there.
All right. Thanks, Tom. First of all, want to thank Tom for sponsoring tonight's event. We very much appreciate that. And so, jumping right into the program, we have the honor of having Ocean State Business Development going to inform us about the SBA's 504 plan. We have the privilege of having James Tierney and Russell Gaston with us tonight. Russell is the president of Ocean State, and James is the first vice president. They both have interesting background. They both came from Coastway Bank, where they are both in the lending and credit end of things. I think that's very beneficial, because they not only know the SBA program, but they know the day-to-day in and out of what a real estate bankers deal with. I think us here at Kirby Properties rely on these guys a lot. A good portion of all our business goes through them, and they have never let us down. So it's kind of an honor to work with these guys, and also the fact of trying to keep it in Rhode Island is critical, at least to us. We're also very fortunate. My partner, Sharon Harrington, is also on the board of Ocean State Business Development. So I think we got a pretty good handle on it, and I'm looking forward to learning more about it. So I guess I'll just turn it over to James from here.
Awesome. Thank you, Steve. Thank you for the kind words. And Tom, always great to see you again. Looks like we have, a great group of individuals here, including some friends and colleagues, which is great. It looks like we have a lot of the lenders from Bank Newport on here as well, and they're a great lending partner. So let me just take a step back, kind of introduce you to who we are, what we do. My name is James Tierney from Ocean State Business Development, and we are a certified development company licensed to offer the SBA 504 program, or as we call it here, Smart Loan Express. It truly is, in my opinion, the best program out there for small businesses. How the program works is we partner with banks in transactions. The bank takes 50% of a project. We come in with up to 40%, leaving the borrower to come in with as little as 10% down. And then subsequently, this is kind of the upper echelon of small business lending. We want to see the companies grow, expand. It's for the economic expansion of women-owned businesses, veteran-owned businesses, minority-owned businesses. And therefore, we pass the savings on to the small business and the owner-operator in the form of a 25-year fixed rate. And the interest rate came out this morning, actually, 25-year fixed rate, 2.985% fixed for 25 years, which is extremely advantageous. That's incredibly cheap money, especially fixed money in the commercial world. Now, what does this mean for you? Obviously, we're here at the RICABOR event, a lot of brokers and appraisers. What does this mean for you? Well, in my opinion, this is another tool in your toolbox, whether it be you have a piece of land that you have the listing for, or building. The ability to get small businesses into the real estate for as little as 10% down is huge from a broker's perspective. Rather than a conventional bank loan, which requires 20 to 30% down, the amount of potential prospects that you may be able to find with the 10% down requirement may significantly increase the ability to sell that property. Obviously, we're all here. We're in the business of bringing deals in and then ultimately bring them to closing. So that's great. Why an SBA loan? Why a 504 loan? The 10% down, extremely advantageous for small businesses. This whole program's about keeping as much capital and working capital into small businesses pockets as possible. And we have a longer repayment term. Typically, the banks have a 10-year term with a 25-year AM. We provide a 25-year term and amortization as well. We also have the ability to include some professional fees. So I'm looking at the appraisers out there. Borrower goes out, they get the appraisal, the environmental ordered. They can subsequently use that as supplementing their equity injection at the end of the day. So we typically tack on about $5,000 to $10,000 in professional fees. Once again, the whole purpose of the program is to help facilitate small businesses purchase, their metaphorical dream building, and keep as much money in their pocket as possible so that they can sustain their salaries and all the day-to-day expenses of the business. I like to call the 504 program a win-win-win. It's a win for the borrower. We get them in with 10% down, and we give them a fixed rate for 25 years. It's a win for us and our broker colleagues, because ultimately we get a deal out of it, and ultimately we get a great customer out of it. I truly believe that some of the customers that we have in our portfolio are not only the best in the state, but the best in the country. I truly believe that. And it's also a win from the bank side. Because we're partnering with banks in transactions, the bank ultimately ends up getting a first mortgage at a 50% loan to value. That is huge from a bank's perspective, because that allows them to take a little bit more risk in the transaction, knowing that at the end of the day, their loan to value or their collateral exposures is significantly lower than if they were to just do the deal conventionally. So that allows the banks to be a little bit more riskier in some of the deals. What I mean by that, obviously, we're in the business of putting good loans on the books, but whether it be a startup or an industry that they may not typically lend to, whether it be the hospitality industry. It's no secret that here in the state of Rhode Island, we're a heavily hospitality state. That this program allows some of those, some of those dollars to be allocated towards that, which is great. And it also, subsequently increases the bank's liquidity position. So the basic eligibility requirements for a 504 loan: small business has to be organized for profit, located in the United States, must demonstrate the need for and the ability to service the debt, and must fit within the size standards. It's funny, the biggest question I get from people who may not understand or know what small business is defined as, believe it or not, 98% of businesses in this entire country are considered small businesses. So whether it's the mom and pop store down the street, or it's a multi-million-dollar manufacturing business, it's all considered small under the SBA, and it's all eligible for the program. So we have a lot of great borrowers that are looking to purchase their dream building. Our stereotypical client has been renting forever. And, that maybe they look at that lease, they see, oh, I'm paying a triple net lease. And quite frankly, I can actually afford a building based on my current lease payment. We add that back to cash flow to demonstrate the need for, to demonstrate the ability to pay back the loan. So I certainly recommend any small businesses out there to, look at their lease agreement. Once it's expiring, never hurts to reach out to any of these great brokers that we have on the call today to start looking at properties. Types of ineligible business, any nonprofits, anything that engages in illegal activity, ironically, life insurance companies, and any companies that derive their 1/3 of their gross revenues from legal gambling. So other than that, most small businesses in this state, at least, are certainly eligible for the program, which is great. So what can a 504 loan be used for? So we can finance the purchase of the land and building, any kind of renovations. We can finance land itself to do a ground up construction deal. We can finance large pieces of equipment that have a useful life of 10 years. So when you think of us and you think of the 504 and the Smart Loan Express program, as we call it, just think tangible assets, primarily in the form of real estate, which obviously, due to the fact that this is a RICABOR event, that seems to be the most pertinent for this audience, at least. So, how a typical loan is structured, like I said before, bank takes 50% of a project. We come in with up to 40%. We get borrowers into, for equity injection, 10% down. And then what happens from there is we simultaneously close with the bank at all times. We're in the business of saving our customers as much money as possible. That goes hand in hand with the attorneys that we work with. We have great attorneys that we use, Sba Relief and J and Carter Law. From there, we do a simultaneous closing. Subsequently, from there, there's a temporary bridge loan, and then we get the borrowers into the next funding cycle. On a month, the government guaranteed bonds are where the capital comes from for the 504 program, not to get too much into the minutia here, and those are priced on a monthly basis. They're loosely, they're priced based on the underlying derivatives of the 10-year Treasury note. So if you see where the 10-year is today, it's a pretty good indicator as where the rates could be for the current funding cycle. And like I said, our all-in fixed rate is 2.985%. So it's extremely advantageous for, for your clients. And once again, that rate is fixed for the entire life of the loan. Now, what does the total process look like? So how the total process works is, we have a borrower, they identified one of your great listings out there, they submit their letter of intent, and then you want to start working into a purchase and sales agreement. When is the right time to reach out to a bank? When's the right time to reach out to a lender? I would state from day one, my whole philosophy is getting ahead of the curve as much as possible, and that includes bringing our great banking colleagues into, or finding a bank that wants to do this deal or has an appetite for this kind of deal. From there, we work with the bank, the borrower, and the broker as much as possible, from everything from reviewing the purchase and sales agreement to ensure that the loan is eligible for the 504, making our comments, all that kind of fun stuff. From there, we package the loan as much as possible, and we try to make it as easy as possible for the bank. We know we work with some of the best banks in the state. Obviously, Bank Newport's here today, which is awesome. They recently were just named the #1 third-party lender, SBA 504 lender in the state, and we were just named the #1 CDC in the state. So we have a very, very valuable relationship between Ocean State and Bank Newport. We know what they like. They know how they want loans presented. We try to package it up as best as we can to facilitate not only our approval, but the banks. It's equally as important. you know, it's no secret that with any type of transaction, you get a lot of, you have a lot of people touching the deal. By working as a team here, we kind of mitigate any, you know, any confusion or any of that kind of stuff. So with respect to turnaround time, like I said, we package the loan, we work with the bank. From there, we send out a term sheet. Some of the other CDCs in the area, we are the only one that's local here in Rhode Island, and we're the only CDC that generates a real term sheet that you can go back to your broker or your seller, say, hey, they're working with the bank. You know, here's at least some kind of evidence prior to approval that, you know, the wheels are in motion. So once we have a full package, we work on a term sheet, we get the bank involved, and then we subsequently move forward with submission to SBA. Our turnaround times are typically about 2 weeks to submit the whole package to SBA, assuming we have a full package, if not sooner. I had a deal that I'm actually working on with Mr. Adam Duclos, who's on the call today. We got it turned around in 3 days to SBA. And subsequently, you know, we're waiting on approval right now. So I think there's a huge misnomer with SBA. They hear that, you know, brokers or agents or sellers, their ears start to bleed. Unfortunately, that's a huge misnomer. We've been very, very fortunate, and typically we have an approval 99% of the time faster than the banks. And like I said, we try to package this and partner to the best of our ability. So that's kind of who we are and what we do in a nutshell. I think as far as sample projects are, you know, that I have on the slide here, we have 2 great customers here. The first one I'd like to talk about is Steel Giraffe. Steel Giraffe, they are a crane company located in Portsmouth on Russo Lane. And it's actually kind of funny, if you've ever driven by there's a few companies on that cul-de-sac, Macmillan, FireX, and Steel Giraffe. We actually financed all of those. So if I could talk to the mayor and say, can we rename the name of that street from Russo to Ocean State Lane? You know, I think that'd be pretty cool. But Steel Giraffe, great story here. Younger gentleman, Stephen Kelly, who's in his 30s, started this business about 7 years ago. In his current operation, he was just, in the previously leased space, he was totally undercapacitated. He was working at all hours of the nights. He had to shift his staff to working 6-hour shifts in the middle of the night, only because of the capacity and the space in which they were. Really prevented him from growing. He was busting at the seams. Ultimately, he identified a piece of property on Russo Road, did a major rehab, and subsequently moved there. That allowed him to significantly increase the capacity of the business, and you know he's still doing extremely well. Subsequently, shortly after we closed on the real estate loan, he identified a piece of equipment, a large crane. It was almost $1 million crane that he thought would truly take the business to the next level. So what we were able to do is also provide the equipment loan for the crane as well. It was kind of the traditional rule for equipment loans is 10 years or less. And the SBA doesn't typically like wheeled, anything on wheels is typically a no-go. So in an effort to help our customer as much as possible, what we did is we packaged the loan, we got the invoice, we conducted a used equipment appraisal demonstrating that the crane has a useful life of 20 years. And then subsequently, we made the argument that it was a non-deeded title concerning, you know, the ability to drive on the streets and stuff like that. So we took a project that was initially not considered eligible and certainly not eligible for 20 years, and we got it approved the exact way that we anticipated. And now the borrower, you know, once again, busting at the seams. Another customer I'd like to talk about, one of our favorites is J. Goodison Company located in Quonset. This was about a $10 million facility. and basically he purchased a large piece of equipment to lift boats out of the water so that they could work on them. He does a lot of Coast Guard work, and he was a disabled veteran. So obviously we were more than happy to help him as well. The SBA looks very, very favorably on veteran-owned businesses, minority-owned businesses, and women-owned businesses. And obviously, certainly we tried to help those class of individuals as much as possible. This project for Goodison, due to the size of the piece of equipment, they needed to put borings out into the water. I believe the borings went about 30 yards under the water. That's all eligible. So any installation, rigging, all that kind of fun stuff with large pieces of equipment are certainly eligible. Same thing goes for a traditional commercial real estate deal. We do have the ability to include renovations as well as ground up construction, or if there's a major addition, that's also eligible for the program. My philosophy is, and when we're talking to our borrowers, it's a big step for a lot of our small businesses to make the jump and purchase their first piece of real estate. And I'm of the philosophy, well, let's make it your absolute dream building. So, go out, assuming that, the numbers look good. There's no reason not to do renovations. There's no reason not to truly outfit the building that can maximize the small business's ability to, bust at the seams. Like I said, we have great partners who handle the disbursements and all that kind of fun stuff for construction. And obviously these are all eligible items within the program. So overall, that's kind of who we are, what we do. Like I said, this is another tool in your toolbox. I would encourage everybody who has a small business in which the borrower intends to occupy greater than 51% of the real estate. I would encourage them to pursue a 504 loan. Another quick note, because I get this question a lot from brokers, is what about multi-use properties? What if there's a office or a storefront on the first floor and there's some residential components on the second floor? That, believe it or not, is eligible for the 504 program. Like I said, the biggest eligibility requirement is the small business has to occupy greater than 51%. So whether there's a residential unit upstairs and there's an office on the first floor, well, what if there's a basement? Is the basement going to be used by the small business? I would say more than likely yes, for storage and that kind of stuff. So there's a lot of ways that we can get very creative and kind of putting a square peg in a round hole, so to speak. Some other questions that I get from brokers is about the rates and the fees and all that kind of stuff for their clients. So like I said before, the biggest, this whole program is all about keeping as much money in the small business's pocket as possible. So we have the ability to include some of those soft costs in the form of professional fees. Like I said, the appraisal and the environmental, some closing costs, title insurance premiums, that kind of fun stuff. And basically getting borrowers in the door for 10% down. Like I said, I can't emphasize this enough. It's a huge and powerful tool from a broker's perspective. And I think Mr. Kirby would agree with that. How many times do you have a borrower that may not have the 20%, 25%, may not have the 30%, but ultimately could come up with 10 or 15 or whatever the case may be? Well, by recommending this program, you may have saved yourself the deal at the end of the day. So yeah, Steve, from here, should we kick it over to questions?
Sure. Well, I've got a couple written down, then why don't we just open it up to the audience to see what they think. First of all, I just want to take a little break in a way and just recognize our speaker from last month, Patty Flowers from IPX 1031. Patty did a great job teaching us about the 1031 and what the benefits of that, the political challenges and things like that. Patty's on the call today, so thank you, Patty, for your help. And we'll just kind of create this like an all-star speaker announcement type thing.
That's awesome. Thank you.
So glad to have you. So James, I think it gets a little confusing as where do people start? So if we're working with a client who wants to buy something, what should we as brokers be doing to help package the information that you're going to need? At what point does the Small Business Development Center at URI fit into this process? At what point do we reach out to the banks for their part of it? So I'm never really sure what goes first.
No, that's certainly a great question. So basically, I would say it's never too early to reach out to myself or the bank. In my opinion, I would recommend reaching out to us first, because we just know this program in and out. Ocean State, we've been the #1 CDC in the state for 5 years in a row. Actually, prior to this, I was just doing a video for video speech accepting our award for the 5th year in a row, which is tremendous. But we're #1 for a reason. We have great banking partners. We pretty much know everybody in the state, and ultimately, we know exactly what the SBA wants. You know, Russ came up with this analogy a couple years ago, and I absolutely love this. You know, we want to be like the McDonald's of SBA lending. You know, you get your request, you package it up with the same consistency as much as possible, and you give the SBA exactly what they want, and then ultimately we work towards getting approvals. Now, going back to your question, I would say start with us, and it's never too early. Whether you have a borrower that is may have lost a property due to a bid or something like that, and they're not 100% sure what they can even afford. Well, I have no problem, and I do this all the time, I have no problem packaging up the loan, even if there's not a purchase and sales prevalent at any point. Let's see what they can afford, and then they can work with you, the brokers, to identify their price range. Now, if there's a project where the numbers are a little bit tight, and I'm glad that you brought up the Small Business Development Center, we have the ability to rely on projections, which is great. So if anybody, for those of you who don't know the Rhode Island Small Business Development Center, it's an absolutely unbelievable organization. It's a subset of the SBA. They're located, their headquarters is out of URI, and they offer 100% consulting for small business. They do everything from teaching QuickBooks to helping with projections. So from there, we package the loan. Okay, cash flow is a little bit tight. From there, we may get the Small Business Development Center in. They work with the borrower for projections. And then from there, we shop it out to the different banks. And they have an absolutely unbelievable team over there at the Small Business Development Center. Anybody should reach out to them and know about them. It's 100% free consulting. You can't beat that for small businesses. So with respect to the logistics, once again, it's never too early to reach out to. It's never too early to reach out to your local CDC and your local bank. I would recommend starting there. And like I said, we try to play quarterback as much as possible. We find the bank. If a borrower doesn't have an attorney, we point them in the right direction for a closing attorney that has sophistication. You know, we try to order the appraisal and the environmental as soon as possible. So that you're not waiting, the broker's not waiting 5 or 6 weeks after a loan commitment to move forward to a closing. So we do things a little bit differently. I like to think, based on some of the conversations that my boss, President Russell Gaston, has had with you, Steve. You know, we're always looking at ways to improve as well.
Right. I think if people have questions, they can put them in the chat as well. Barry Lofson just asked if somebody already has an existing SBA loan, can they apply for another one?
Yeah, absolutely. So the total cap is 5 million between all SBA products together. So in this scenario, it sounds like she may have a borrower that has an existing 504, an existing 7A on a property, and they're looking at purchasing another location. I think that's a great question, and that's a great scenario. So how I would do this, how I would look at structuring that is we have the ability to do a debt refi and a debt refi with expansion. They're two subsequent programs of the 504. So what I would do is I would refinance that first SBA mortgage for the expansion and the purchase of the other real estate. From there, I would use the equity in the building that the small business has built up and use that as the borrower's down payment. Once again, trying to get, trying to keep as much money in the pocket of the small business as possible. And then from there, we would loop both properties under one loan, and that would be subsequently fixed for 25 years. And right now the interest rate is 2.985. So that's a great question.
Okay. Another one, George asked if this program can be used for residential investment properties.
Unfortunately, this program is primarily designed for small businesses that are going to occupy greater than 51%, and the building does have to be zoned at the very least mixed use. But going back to what I mentioned earlier, if you do have a scenario where there is a residential component to it, and there's maybe an office or a storefront, a hair salon, or whatever the case may be, just because there is a residential component to it, that it doesn't mean the deal's dead as far as SBA is concerned.
Okay. Just from a situation we had last month, we just closed down a marina that you guys saved and helped us with. One of the things we learned in that process was there's things called special purpose real estate. In a marina, I guess, is a special purpose. Can you explain what we should be looking for in that regard?
Yeah, absolutely. No, that's a great question. So as I mentioned, we get borrowers into real estate for as little as 10% down. If in the event that you have a special use facility, it is an additional 5% down. And if it's considered a special use and a startup, then we require 20% down. But in either case, it's still below the bank's threshold for a conventional loan. Special use is exactly what it sounds like. Essentially a single purpose asset. So whether that be a gas station, a golf course, a marina, any of those types of industries that in the event of liquidation, and I hate using that word, knock on wood, that it would not be easily able to be converted into something else. And to that point, Steve, like I said, we at Ocean State, we try to get very creative. We try to get borrowers in with as little as possible, because I look at it as the more money they have in their pocket, the more working capital they have to essentially do what small businesses do, is just run the day-to-day operations of the business. So recently, we had a borrower, the Bodie Spa, who just won Small Business Person of the Year in the state of Rhode Island, and they are both going. They're both going to Washington, D.C. I mean, it may be virtual this year, but to hopefully go to try to win Small Business Person of the Year for the country. What they have inside their location are various different pools and spa equipment and that kind of fun stuff. Well, we made the argument to SBA that the pools could theoretically just be simply removed, and therefore that is not considered a special purpose asset or a single use asset. And we were ultimately able to get them in the door with the 10% down. Like I said, in some scenarios you can do that. In some scenarios, like a golf course or a marina or a gas station, unfortunately, they're truly single purpose, and so it would require an additional 5% down.
We've got a question from Demetrio asking about the typical fees for the loans, outside appraisals, environmental reports, legal costs. Are there any origination fees? And I guess I'll add on to it is, do all these have to be doubled up with the bank, or is it just one appraisal, one environmental?
Yeah, that's a great question. So, with respect to the appraisals and environmentals, we order one report and we share that with the bank. We just typically get a reliance letter, or on an appraisal, us and the bank are just added as intended users. The new SBA SOP came out, and it's actually very exciting stuff that's in there, about as exciting as it can get with appraisals, environmentals. But under the new regulations, $500,000 or under, we do not require an appraisal, which is awesome, and that saves the borrower a tremendous amount of money. And then subsequently, with respect to environmentals, the SBA has increased their threshold for environmental reports, and oftentimes we're able to get away with environmental questionnaire, which essentially doesn't cost anything, depending on the prior use of the building, whether it be an office that's under $500,000 purchase price. In that instance, all we would have to do is get the loan approved. We would just get the environmental questionnaire, and there would be no appraisal required. Now, going back to the fees, so one great thing about this program is all of the fees are included in the loan amount. So at the time of application, say you have $1 million transaction, our net loan amount is $400,000, and then there's the gross loan amount in which the fees are included, and those are essentially amortized over 25 years. At that low interest rate. Other outside of pocket fees that I can think of, as I mentioned, we try to include as much professional fees into the loan as possible, whether it be that appraisal, the environmental, if there's architecture fees, if there's title rundown fees, all that kind of stuff. Those are all eligible expenses to be included into professional fees as well. And truly the only outside pocket fees is the cost of the closing, and there's a small third-party lender fee. It's 0.05 basis points of the third-party loan amount. And obviously we can get into the calculation if Demetrio would like to talk to me, face-to-face or whatever the case may be. Also very exciting, this hasn't been implemented by SBA, but it was in principle agreed to in Congress. And I was actually on a conference call with DC last week with a lot of our other colleagues. From my understanding, I believe starting in February or March, there'll be no SBA fees as long as the SBA can continue to run on zero subsidy. Like I said, that has not been implemented by SBA. They are working on that right now, but that has been agreed to in principle by our legislators. So that's a great question.
Another one. The only point of all this is just to help us do more deals. So being selfish about it, how does the SBA refinance program work? And can us brokers have people refinance things so that they can then go out and buy more properties for their business?
Yeah, absolutely. So with respect to the refinance program, the biggest eligibility requirements are the loan has to be on the books for at least 2 years and paying as agreed, and it had to have been eligible for a 504 at the time of application, meaning that 85% or more of the total loan proceeds were used for essentially a tangible fixed asset. Now, with respect to the debt refi program, I understand the question that you're begging concerning a potential cash out to buy another piece of real estate. That would not be eligible for the 504. Having said that, in the scenario that I presented with the Bodie Spa, with the Bodie Spa, they had an existing location. We essentially refinanced that, used the equity in the land that they had previously acquired, and then they purchased another building out of it. So I guess the key word there is expansion. If you have a borrower that's looking to expand and open up a second location, then our program certainly fits the criteria to do that.
Okay. Christopher asks if you could talk a little bit about the SBA relief component with what's been going on. I know on the federal level, they've given up to 6 months in abeyance.
Yeah, absolutely. So like I said, so all of these items have been agreed to in principle by Congress. None of these debt relief programs have been released concerning the SBA 504 program. I know SBA is working very, very diligently on figuring out and working with the CSA, which is essentially responsible for tracking all of the payments throughout the entire country, on the logistics of the free payments, essentially. From my understanding, borrowers will be eligible to receive 3 to 8 months of free payments, depending on what type of NAICS code or industry they are in. So for my understanding, I believe starting in February, if you have a restaurant that currently has a 504 or a 7A, they'll be eligible for up to 8 months of free payments. I think the best way to answer this question is to go back and kind of talk about what happened during the first round of the CARES Act payments. We've had basically all of our borrowers get 6 months of payments for free. That is absolutely huge. I'm sure a lot of those borrowers or small businesses that did not have an SBA loan or had a conventional loan or whatever the case may be, they missed out on a major benefit of having an SBA loan, to be honest with you. And at the time, all of our existing customers got 6 months for free, which was absolutely awesome. But some of our new projects that we put on the books also get 6 months for free. I worked on a great deal with Joe Bell for a plumbing company. We were subsequently able to fund the loan, and he got 6 months for free starting the first month, which was absolutely unbelievable. So it's a huge benefit concerning timing and all that kind of fun stuff. And that may be not that I want to tell the brokers to go out and tell their clients they're going to get free payments. But, once again, it's another tool in your toolbox.
Right. At this point, why don't we just ask anybody to unmute themselves and ask any questions that they may be thinking about?
Yeah, Steve, it looks like Janice sent a nice question. If I may answer that first. She said, is there a minimum number of years in operations for the business to be eligible, and or any financial minimum requirements that must be met for eligibility? So, I think Janice is getting at if we have the ability to look at startups. The rule of thumb is the SBA considers a small business a startup if it's been in operation for 2 years or less. Having said that, we have the ability to rely on projections. If it is a startup, it would require an additional 5% down. But just because it's a startup or just because they've only been in operation for a year doesn't mean that the loan's dead in the water. I mean, we get very creative here. We look at everything pretty openly. We're pretty transparent, and at the end of the day, we're here to help small businesses as much as possible. Steve, if I may use the marina as an example, we had an existing marina in which our borrower was purchasing it. There had been previous operator in place, and what we were able to do was kind of demonstrate to SBA using the historical tax returns that the business had been in operation, even though our new buyer, was essentially was not involved with that prior ownership group. I would say 2 years is the magic number, but once again, I would just recommend that you feel free to give me a call and we can discuss this. And then from there, Steve, if you want to open it up to everybody.
Yeah, anybody who wants to challenge James, here's your shot. Since everybody's being bashful, I'll ask one more. Since a lot of our members are also appraisers, any words of advice about how they can get involved in this program? And when the SBA is, I think you send everything out to California for a review, but is there certain things that get looked at on the appraisal side that you can give some advice to?
Oh yeah, absolutely. So the biggest thing here is sharing eligibility. So we're very fortunate. We've worked very closely, for example, with Tom Sweeney and a few other appraisers in this group in the past. I just want to say thank you to all of you. The biggest thing is just ensuring eligibility. The basic language that's required is having us and the bank listed as intended users. We need to identify a useful life of at least 25 years. And then, working with the appraiser, we really need to just drive home the fact that the small business is going to occupy the greater than 51% of the commercial real estate. We did one where we assisted with projections, or we helped tweak the projections. And the borrower utilized his CPA to kind of nail down a firm set of projections, and that was included in the appraisal as well. So, I would just like to say thank you to all the appraisal partners that we've worked with over the last X amount of years.
All right. Any other questions from anyone? Looks
like Fred sent me a question privately. Fred, I hope I your permission to read this out loud. What type of borrower guarantees are required? Personal guarantees, personal residence, etc. So basically, all owners that own 20% or more of the operating company are required to be personal guarantors on the loan. Now, with respect to securing personal residences, we try not to do that as much as possible. Our primary collateral is the real estate in which the small business is purchasing. So very, very rarely do we try to find additional collateral in the form of personal residences and that kind of stuff. Only in very unique scenarios where there's a true collateral shortfall, we may look to find additional collateral, whether it be a vacant piece of land or a personal residence or an investment property or that kind of fun stuff. But we try to mitigate that as much as possible. I'll give a really good example of that because this is a customer that we're very proud of. And once again, this is all public record. So I am allowed to discuss these things. R1 Indoor Karting in Lincoln. I don't know if anybody has heard of it or has been there. It's like honestly one of the coolest places I've ever been. It's essentially it's like an adult playground. There's carts you can drive, whatever the case may be. All they did, it was a leasehold renovation deal. They did not own the property. They just did a major build out. So what we were able to do, the 504 program typically isn't used for leasehold improvements, when there's actually a true lease involved. But we were able to securitize or collateralize 4 properties in Miami that the borrowers had as investment properties down in Florida to justify our collateral shortfall with the leasehold improvement loan. Which is pretty cool. So, that's an instance where we may have to look for additional collateral, but like I said, we try to we try to mitigate the need from tying in somebody's personal residence as much as possible.
Great. Anybody else? I guess with that, Tom Swinney or Jack Hudson, any other comments?
I would just like to thank James and you, Steve, James especially, for putting this on. Again, it's our hope to provide information to our members and anyone in the industry, the information they need to be successful and to earn more money and to know all the avenues that are available to them. I would like to remind everybody, I think I mentioned it earlier, I know I did, that we're going to do a overview of the commercial and industrial market in Rhode Island in February. I believe the date is February 10th. But more information will be going out about that soon. Again, if anybody is interested in joining RICABOR, whatever you want to call it, please reach out to Jack Hudson, our executive director, or me, or any of the officers. You can get our information on the Rhode Island Commercial Appraisal Board of Realtors website. So with that being said, again, thank you, James. Thank you, Steve. Also, thanks to Steve Flashbot for his participation in getting this together. And hopefully we'll see most, if not all of you next month. Thanks a lot and good night.
Good night.
Thank you, everybody.